Welcome back to Candlestick Signals for today's market, August 11th, 2025. Buckle up, traders, because we've got a roller coaster of candlestick signals to unpack. From bullish engulfing patterns in tech giants to shooting stars in energy stocks, today's market is a technical analyst's dream. Stick around as we dive deep into the patterns that could make or break your portfolio. Let's kick things off with a snapshot of today's market action. Global equity markets experienced a whirlwind of intraday activity, with major indices reflecting investor responses to fresh economic data and notable sector rotations. Blue-chip indices displayed a mixed bag of performance. While mid- and small-cap stocks showed increased volatility throughout the session, the S&P 500 caught our attention, hovering tantalizingly close to its quarterly highs, while tech-driven sectors demonstrated remarkable resilience in the face of profit-taking pressures. Now let's zoom in on the candlestick structures that define today's trading landscape. The information technology sector led the charge with an impressive bullish engulfing pattern, signaling strong buyer conviction after a minor pullback. Tech behemoths like Apple, Microsoft, and NVDA were at the forefront of this bullish momentum, with their market capitalizations surging by an average of 3.2%, or approximately $150 billion combined. This pattern emerged prominently around 10:30 a.m. Eastern Time, setting the tone for the sector's performance throughout the day. Not to be outdone, the consumer discretionary sector mirrored this bullish sentiment. Amazon, Tesla, and Home Depot showcased similar engulfing patterns, collectively adding about $85 billion to their market value, translating to a 2.8% increase. These patterns formed decisively after the lunch hour lull, around 1:45 p.m., injecting fresh energy into the afternoon trading session. Shifting gears to the financial sector, we observed a sea of doji candlesticks, particularly among banking giants like JP Morgan Chase, Bank of America, and Wells Fargo. This formation, characterized by small bodies with long upper and lower shadows, materialized during the mid-morning trading hours around 11:15 a.m. The doji pattern in financials suggests a moment of indecision in the market, with the sector's overall market cap remaining relatively flat, fluctuating within a narrow range of $10 billion, or 0.3%. The utilities sector echoed this indecisiveness, with prominent doji formations across major players. This sector saw minimal movement, with a slight decrease of 0.1%, or roughly $2 billion in market capitalization. The doji patterns in utilities became most pronounced towards the closing bell, around 3:30 p.m., reflecting end-of-day uncertainty among investors. In a contrasting display, the energy sector painted a cautionary picture with shooting star candlesticks marking the session highs for industry leaders like ExxonMobil and Chevron. These formations, characterized by long upper shadows and small bodies, emerged during the early afternoon trading around 1 p.m. The shooting star pattern suggests a potential short-term reversal, with the energy sector experiencing a pullback of 1.5%, or approximately $30 billion in market value from its intraday peak. The healthcare sector provided a glimmer of hope amidst the mixed signals, with hammer candlesticks forming among industry titans Johnson & Johnson, United Health Group, and Eli Lilly. These bullish reversal patterns, featuring long lower shadows and small upper bodies, materialized during a brief dip around 2:15 p.m. The sector quickly rebounded, closing the day with a 1.8% gain, equivalent to a $45 billion increase in market capitalization. Diving deeper into our technical interpretation, market breadth analysis revealed that advancers significantly outnumbered decliners, particularly in growth-oriented sectors. This disparity hints at a bullish underlying sentiment that could fuel further upside in the coming sessions. Volume analysis provided additional confirmation, with elevated turnover accompanying the bullish engulfing patterns in information technology and consumer discretionary. This combination of price action and volume surge reinforces the breakout potential for these sectors. Support and resistance levels played a crucial role in today's price action. Key indices respected major support levels, with the S&P 500 bouncing off its 50-day moving average at 4,850 points. Simultaneously, several blue-chip stocks tested resistance levels, implying a possible setup for trend acceleration. Notable examples include Apple challenging its all-time high of $205 per share and Microsoft flirting with the $400 mark. Let's break down the sector and stock highlights that define today's session. In the information technology sector, the bullish engulfing pattern we mentioned earlier was particularly pronounced in semiconductor stocks. NVDA, for instance, saw its market cap surge by 5.2%, or $65 billion, closing at a new record high. This movement suggests fresh buying interest and potential trend continuation in the chip industry. The healthcare sector's hammer formation was most evident in pharmaceutical giants. Eli Lilly, riding high on recent FDA approvals, formed a textbook hammer candlestick and closed up 3.5%, adding $18 billion to its market value. This pattern indicates robust support levels and sets the stage for a potential rebound across the broader healthcare space. In the financial sector, the prevalence of doji patterns among major banks signals a period of indecision. JP Chase, for example, traded within a tight range all day, closing with a negligible 0.1% change. This sideways movement suggests that investors are awaiting further catalysts before making significant moves in the banking industry. The energy sector's shooting star formation was particularly prominent in oil majors. ExxonMobil, after reaching an intraday high of $120 per share, retreated to close at $115, forming a clear shooting star pattern. This 2.5% pullback from the day's high, equivalent to a $10 billion decrease in market cap, serves as a warning sign for potential exhaustion in the recent energy rally. Consumer discretionary stocks rode the wave of bullish sentiment, with Amazon leading the pack. The e-commerce giant formed a robust bullish engulfing pattern, closing up 4.2% and adding $60 billion to its market value. This movement suggests renewed buying pressure and maintains a bullish bias for the sector. As we assess the overall sentiment and outlook, investor mood appears moderately bullish, buoyed by positive macroeconomic data and constructive technical signals in growth sectors. However, the presence of indecision patterns like doji and shooting stars in cyclicals and defensive stocks underscores the need for selectivity as markets approach key resistance levels. Short-term traders should remain agile, focusing their attention on sectors exhibiting robust candlestick conformations and significant volume surges. The information technology and consumer discretionary sectors, with their bullish engulfing patterns, present particularly attractive opportunities for momentum traders. To summarize today's key candlestick patterns and their implications, the bullish engulfing patterns in technology and consumer discretionary sectors signal upward momentum and potential breakouts. Traders should watch for follow-through in stocks like NVIDIA and Amazon in the coming sessions. Hammer formations in healthcare stocks suggest possible trend reversals to the upside. Keep an eye on pharmaceutical leaders like Eli Lilly for confirmation of this bullish signal. Doji patterns in financials and utilities indicate uncertainty. Traders may want to wait for clearer directional cues before taking significant positions in these sectors. Shooting star formations in energy and materials stocks warn of potential pullbacks or reversals. Monitor oil majors like ExxonMobil for signs of trend exhaustion or continuation. In conclusion, today's candlestick analysis underscores the importance of pattern confirmation within sector leaders by market capitalization. The market remains cautiously optimistic, with bullish patterns in growth sectors suggesting further upside potential, provided macroeconomic tailwinds persist. Savvy traders and investors should leverage these candlestick formations in conjunction with volume and market breadth indicators as leading signals to navigate potential inflection points in the days ahead. Remember, in the world of technical analysis, context is key. Always confirm these patterns with additional indicators and fundamental analysis before making trading decisions. That wraps up our candlestick signal analysis for August 11th, 2025. Stay tuned for our next market update where we all continue to decode the charts and help you stay ahead of the curve in this ever-evolving market landscape. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.